And I'm telling you, man, the millionaires are made in these markets right now. What's up, guys? It's Jack, and there's a ton going on in the market right now. So I wanted to make a quick video to update you guys. We have PPI numbers that came in much lower than expected. You have earnings season getting ready to kick off. Obviously, you have all this drama going on with tariffs and China retaliating again. You have Bitcoin sitting at a key level of resistance and gold hitting all-time highs. I mean, there's just so much going on right now. So much volatility, but all I ask for you guys is to subscribe to the channel so you can see more content like this and like this video. But let's jump right into it. So the first thing I want to cover is the PPI report, which came in much lower than expected. I mean, the expectation was a 3.3 and we came in at a 2.7. So I don't know if you follow these numbers often, but typically, it's a point higher or a point lower, or almost dead on, with a beat or a miss, right? So this was a pretty substantial beat, and this is probably why you're seeing some optimism in the market. But the question is, is this just companies maybe just not raising prices at this time because of the uncertainties with the tariffs, and they want to see how these tariffs play out, because obviously that's going to impact prices a lot. But nonetheless, the numbers came in good, and that's a little bit of good news within all of this bad news that we've been hearing. Obviously, this is something you want to keep your eyes on. The next reporting cycle, this could be much higher, and it could just go completely out the window. We also have gold hitting all-time highs. Obviously, when there's a lot of uncertainty in the markets, people tend to put their money in different places, right? Whether that's bonds or commodities. And this scenario with gold hitting all-time highs. So, people always wonder, when the market's crashing, is everything crashing? Not necessarily, and gold is a prime example of this. So, anytime when there's uncertainty, people tend to veer towards gold, where, when it's a risk on market and everything's looking good, then, you'll see gold probably fall a little bit in that scenario, because people are taking on more risky assets. But nonetheless, pretty cool stuff with gold hitting all-time highs, while you're seeing markets, sell off dramatically. So I just thought that was a fun fact. And then you have China. All right, obviously there's a ton of news and whatnot and videos being made about the tariffs. So China just retaliated and increased their tariffs to 125%. Right, so it's kind of like a retaliate, going back from China to the U.S. and essentially just kind of creating like a trade war. But apparently China said, hey, look, 125 is it. We're not raising after this, even if us as the U.S. comes back and raises our tariffs again, retaliates back. China says, hey, this is it for us. So there's a little bit of a silver lining there, obviously. This kind of, I guess, puts a floor in what this tariff situation could be, because it's kind of getting out of control. And maybe there's a little bit of hope here that eventually, we can come to some type of agreement with China. If that were to happen, I think that would just be very optimistic for the markets. And then obviously, just a couple days ago, Trump came out and did a 90-day pause, which is when you saw, the stock market just rally. I mean, it was the biggest relief rally that I've ever seen personally in the stock market. I mean, the markets, or the SPY and the QQQs, the overall market was up over 10% in one trading day. I mean, it was pretty intense. But it's just news, and the next day, it dropped like another 5 or 6%. I mean, it's just been super volatile. So when these days happen and the markets increase that much, just don't get your hopes up and be like, oh, this is the bottom, and then go all into the market thinking like, oh, this is it. Like, we're definitely recovering from here, because I have looked in the past, and there's been other times where we've had really big rallies, and we actually end up making a lower low after that. So don't be surprised if that ends up happening in this scenario as well. So just keep that in mind. Again, I don't want people to get too emotional with this market, because it's honestly super easy to do that. You have to try to just leave your emotions out of it right now, because at the end of the day, there are some really good buying opportunities out there. But as I was mentioning with the tariffs, not only did they do a 90-day pause, but Trump also pretty much told every other country that we're going to take their tariffs down to 10%. Okay, so all that other fugazi that he was talking about was kind of out the window. Everything's just at a flat level of 10%. So again, that was overall good news as well. It's kind of like we're just fighting with China right now, which I think is smart, because the last thing we want to do is be, battling and fighting tariffs with 10, 20, 30 different countries. I mean, it's pretty intense. It's pretty insane. It's kind of like that, same saying, don't have your hands in too many baskets, because, you're not going to be able to give it 100%, right? Like if you have 5 different jobs and you're trying to do the best at every job, I mean, it's just so hard to be really good at one thing. So, kind of an analogy of, what's going on there, in my opinion, where it's like, hey, let's just focus on China. That's like our main trade partner. If we can just somehow cut a really good deal with them, I mean, personally, I could see the markets rallying like crazy after that. We could see a V-shaped recovery, but again, with this market, it's so much uncertainty. Just don't get too emotional. Don't think we've hit a bottom, because it could get worse. And at the end of the day, nobody, okay, I don't care who it is, can time the bottom of a market. Also, you have earnings season getting ready to kick off. So this is going to be a huge thing to keep your eyes on, because this is another thing that a lot of people are concerned about, right? These companies can come out, and I would not be surprised if they beat expectations on their earnings, on their EPS, on their revenue. I would not be surprised, but that's not what the market's looking for. They're looking for the forward guidance, okay? So if you ever wonder why, a stock's down so much after it came out and like made record revenues and, beat on their earnings, it's because they gave a light guidance, a guidance that was worse than expected, which is pretty much saying, hey, I know we beat this quarter, but we're, thinking because of all the tariffs and uncertainties, our revenues are actually going to decrease next quarter, right? And if you hear that, I guarantee you these stocks are going to start dropping. So this is something to keep your eyes on. This could make or break the market as well, right? A lot of people just are unaware, right, of the full effect of what these tariffs are going to have. So obviously these companies, they probably have a better idea, knowing that, hey, this much of our business in China, and if the tariffs are this much, we're going to have to increase our costs to consumers, and we're going to have to eat some of the margin, and there's going to be a lot going on, right? So earnings season is getting ready to kick off. That's something you want to keep your eyes on for sure. There's probably going to be a lot more volatility in the markets, but depending on how these earnings come out, it could definitely give us a good idea of what the next months are going to look like going into the summertime. We also have Bitcoin, all right, at a key level of resistance. So if you're looking at a Bitcoin chart, you pull up the 4-hour time frame, you can see that we've been trading under the 4-hour 200-day moving average, okay, and we have not broken above that in a pretty long time. So sitting at a key level of resistance. And I like to mention this because I've noticed that Bitcoin sometimes is like a leading indicator, right? Where if Bitcoin were to break out over that level, let's say over the weekend, I would not be surprised if I saw the overall market rally, come next week. Vice versa. Usually when we get to levels like this, right, you're either going to break out above it or you're going to get rejected. So that could happen as well. And that's why I like to mention, keep your eyes out on, the level that it's trading at right now, Bitcoin, because, depending on what it does next, could, kind of give us some direction of where the market's going. Because again, if it gets rejected, it, could just pull back a little bit, but it could be pretty substantial too. So again, I think the main thing I want to just kind of drive home here is, just don't think that the bottom's in on this market, right? And I'm just giving you some kind of indicators and things to look at to kind of help you make better decisions. So obviously the next thing after this is just whether or not it's a good time to buy the dip. We'll cut to the chase. Yes, man. I mean, I think Amazon's trading at a level that it was trading at 4.5 years ago. All right, and just think logically. Amazon has been growing since then. Like they've been growing revenues, they've been growing their operating income, they've been growing everything. Right, the business is adding new segments. I mean, it keeps growing. Right, so there's no reason why it should be priced at this. It's just fear being priced into the market right now. So, Amazon's up 10% off its lows that it just had recently, right? It's still a good time to start dollar cost averaging into this company, though. I think this is one that I'm keeping my eyes on for sure. There's a ton out there, though. It's not just Amazon. I mean, Google is priced pretty dang well right now. Meta's getting cheap. Apple, all these, right? I mean, you could just honestly even buy the indices, the SPY or the QQQs or the NASDAQ, whatever you want to call it, and, start buying the dip on those. But this is the biggest thing, right? I'm not saying go all in. You're not going to go 100% in with your capital right now, assuming that you have cash on the sidelines. Or, obviously in the best case scenario, your income is higher than your debt. So, every paycheck, every 2 weeks, every month, whatever it might be, you got a little bit of capital to, throw into the markets. That's the best case scenario. Just keep dollar cost averaging, all right? Because the best way to look at this is in a long-term mindset, right? 3 to 5 years from now, I promise you, 3 to 5 years from now, you'll be like, thank the Lord that I was buying into this, fear and this dip, because you don't get too many opportunities like this ever, really. Very rarely does the market pull back this much, right? And again, it could go lower, but you have to look at this like it's a better buying opportunity. If it goes lower, buy more, right? That's what I'm saying. Like dollar cost average into the position, buy a little bit, every week, every 2 weeks, and just keep adding to your average. Who cares if you're down on the position? You should be happy that the stocks keep falling as long as you have one, capital or more money to put into the market, or if your income is more than your debt, then you'll always have a little bit extra income to keep putting into the market. And I just think this is honestly, personally, in my opinion, a time to just really start buying heavy into this dip, right? Like not going all in today or tomorrow, but just having the mindset like, okay, I'm going to make sure I'm going to start putting in as much capital as I can, right, into these companies. I'm going to buy, $2, $3, $4, $5,000 today, and then next week, 2 weeks from now, 3 weeks, we're going to see where the market's at. I'll buy some more. Nonetheless, I don't care which way you look at it. Some of these companies are just priced extremely well, and you're going to look back later and you're going to be like, why did I not take advantage of that opportunity? Because when the market does recover, I promise you're probably never going to see these levels ever again on some of these companies. So again, that's just my 2 cents. Obviously, this is not financial advice. I know it's really hard to buy into the fear, but as Warren Buffett always said, be fearful when others are greedy, right? When the market's at all-time highs in that scenario, and be greedy when others are fearful. And right now, I mean, the fear indicator it's insane. I think it's like a 4 out of a 100, right? Fear to greed. I don't think the market's really ever been this fearful since like the 2008 Great Depression. It's insane how fearful people are right now. But you want to buy into the fear. I don't care what all these analysts are out there saying, like, oh, it's not time to buy, it's this, it's that. Who the hell cares? Because at the end of the day, if you're buying high quality companies, it doesn't matter. Like, they're going to prevail, right? They're going to come out on top. And at the end of the day, you don't know when the bottom is, right? We could just completely start recovering from here. And again, you'll never have an opportunity to buy these companies. We could go lower. We absolutely could go lower. In that scenario, I just think keep buying. Again, don't go all in 100% right now. Keep some money on the sidelines, in case the market does pull back more. And then just be thankful that you're buying some of these companies at an even better price and valuation. And I'm telling you, man, the millionaires are made in these markets right now. All right. And I know it sucks, especially if, let's say, you're in some of these positions, you're down, it's emotional. I'm going through it too, right? I mean, most people's portfolios are down from where they were, a few weeks ago. And it sucks, it's painful, and it's really, I know it's hard also to sit there and, decide that, hey, I'm going to even put more money, I'm down 10, 20, 30, 40,000. I'm going to put even more money into the market. Like, that's a scary thing. But we have a ton of data, a ton of history showing that the markets go up in the long term. And I think it's a great buying opportunity. But again, if you have not already, please subscribe to the channel. I hope you guys enjoyed this video, and I'll see you guys in the next one.